Good morning, good morning, good morning. He has risen. He didn't die over the weekend. I'm back, everybody. I'm back. Michael Brown's back. Come on down, Mr. Brown. Come on, Mr. Brown. Don't leave me waiting.
Morning, Ryan. Good morning, everyone.
Morning.
You sound a lot more cheerful than you did towards the back end of last week.
Oh, I still feel utterly rubbish, but I had my first decent night's sleep. Obviously on a Sunday night, so I had to wake up early because my alarm went off. But no, thank you for asking. I am feeling much better, though still pretty crappy, but it is what it is. Let me just get the legals out of the way. Nothing discussed on this space this session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trading as PIQ or PIQ Suite, or its affiliates, including the hosts, which is obviously the awesome Mr. Michael Brown, and myself, Mr. Ryan Paisley. Yeah, what have I missed? All good?
Well, welcome back. I suppose that's the biggest news is that you're still alive, Ryan, isn't it,
Well,
really?
yeah, Ian's in bits, obviously, because Ian the dog was going to get everything. So yeah, he's in bits in Newquay. If he's not blown away, I don't know how windy it was down there, but apparently it's pretty windy.
I wouldn't know.
Although he's quite squat and like statuesque, so it'd take a hell of a wind to blow him over.
I was going to
Um,
say it really would, wouldn't it?
the low centre of gravity. But anyway, we've digressed straight away, and it's only been a
Oh,
minute into Monday.
we have. It really has descended, hasn't it? Anyway, good morning, everybody. Let's have a very quick look back at last week, and then we can look ahead to this week. It was a positive end to the week on Friday, with the S&P 500 gaining around 0.4%. That, of course, rounding out a sixth straight weekly gain for the S&P 500, which is the best run for the index so far this year, as the path of least resistance continues to lead to the upside. In terms of markets elsewhere on Friday, though, it was somewhat more subdued. The commodity space again saw the most volatility, with gold rallying by around 1%, a fourth straight daily gain for the yellow metal, notching fresh all-time highs north of $2,700 an ounce, and we've extended those gains in early trade this morning. While crude continued to slide down by around 2% on Friday, WTI ended last week about 8% lower. Friday seeing WTI, the front contract, settle around $69 a barrel, which is the lowest settlement since the 1st of October. Elsewhere, though, markets were a little bit more subdued. The foreign exchange market largely treading water into the tail end of the week, although we did see the dollar lose some ground against most G10 peers. We have seen that recovered in early trade this morning. The dollar on Friday facing headwinds as a result of lower front-end treasury yields, with the 2-year ending Friday around 3 basis points lower. As expected, though, Friday was a day of really lacking in any significant catalysts. We had a bit of a dearth of economic data releases. The housing starts and building permits figures from the United States didn't move the needle too much. Starts a little bit better than expected, permits a little bit softer than expected, but by no means were they overly impactful. We did have some sources reports on a couple of central banks, though. Reuters sources reporting that some of the doves on the ECB's governing council, they wanted to remove their pledge to keep policy tight, which has been in the policy statement for some time now. Let's be honest, they're going to have to remove this pledge in relatively short order anyway. Of course, they've now delivered 3 25 basis point rate cuts this cycle, so 75 basis points in total. Previous sources reports indicated that they could deliver 3 or 4 such rate cuts before policy moves back to a more neutral setting. So you would expect that language is going to change in December regardless. We also had some Bank of Japan sources reports on Friday, this via Bloomberg. Reportedly, the BOJ see little need to rush into a rate hike at their October meeting, which comes towards the tail end of the month, but they do see prices in line with their current view, which would enable a hike either later on in this year or early next year. Again, shouldn't be particularly surprising. The October BOJ meeting really coincides with the upcoming Japanese election, so it would be very, very surprising indeed if they changed any sort of policy settings. Speaking of policy, policy, but on a fiscal perspective here in the UK, of course, there have been a number of reports as we move towards the budget on the 30th of October. The latest is that the Chancellor is planning to extend the freeze on income tax thresholds. For those who aren't aware, the way that income tax works here in the UK, you pay a different tax rate depending on various income brackets. So, for example, up to about 12 grand, you don't pay anything. Between 12 and I think 50 grand, you pay 20%. Between 50 and 120-ish, you pay 40%. And above that, you pay 45%. The government want to freeze those thresholds or extend the freeze on those thresholds at their current level. This creates something called fiscal drag because what happens over time is earnings naturally increase. We saw earnings growth of about 4% on an annual basis in August, according to the latest ONS data. So what that means is if the thresholds stay the same, but earnings increase, more people are dragged into higher income tax bands and have to send more money to the Treasury as a result of that. And of course, that will, they expect, go some way to filling this black hole that supposedly exists. Of course, they continue to stretch the limits of the manifesto promises. The manifesto pledged not to raise income tax. Technically, this is not raising income tax. It's just making people pay more tax by keeping
It's a
things
ghost
as they are at the
tax.
moment. Well, it's a stealth tax, isn't it?
No, it's a ghost tax because it's spooky and it's Halloween coming up. Come on, get with
Oh,
it.
God.
I'm
Deary
feeling
me.
better. I'm feeling better. Give me the wins whilst I can, please.
Can you be ill again?
Oh,
Um,
mate.
we also had a few other reports in the newspapers over the weekend. There is some changes to to inheritance tax, sorry, that are coming in. Currently, if you give someone a gift, as long as you survive 7 years, that gift is not liable to IHT. That 7 year
Tell you what,
threshold likely.
there's gonna be a lot of demand for like adult-sized taxidermy going on.
Well, exactly. That is now going to change to 10 years,
Oh
apparently.
no,
And
I'm
there are
gonna have to get the
also
duster out.
Oh God! And there are also reports around stamp duty. The stamp duty thresholds. This is what you pay when you purchase property. They are going to go back to the level they were at before Liz Truss, her mini budget, actually in 2022. This is about the only
Oh, I remember
policy
that.
that still survives. We're going to see the stamp duty thresholds go back to 125,000, but in London is 125,000 for everyone. If you're a first-time buyer, it's going to go to 300,000. For those who are unaware, the average price of a property in the UK is about 303. The average price of a property in London is about 480. So by changing these thresholds, people in London specifically, it's going to go from about 1 in 5 property purchases being liable for stamp duty to 70%. This is specifically talking about first-time buyers. So if anyone thinks this is going to help the issues we have with housing in this country, then I've got a bridge to sell you.
But is
The
there
only
stamp
other,
duty? Hang on, is there stamp duty on bridges?
oh,
How does it
probably.
work on infrastructure?
Oh, I'd imagine so.
Come on, you're the nerd here. You should tell me these things.
The other thing from over the weekend and you may be about to touch on this, but tough,
Go
I'm
on.
going to anyway, is that Boeing, they have
Oh,
reportedly,
crosses
or
that one off.
they are reportedly getting close to settling their long-running issues with the unions. So we will obviously keep a relatively close eye on that one. But that is it's actually a lot from me in terms of the last few days.
Okay, thank you very much. So I've got a few headlines here from our friends Andrew Hart, Zach, obviously, and Newscork. So just a few things. So Andrew notes in his morning note that hedge funds net bought tech info stocks at the fastest pace in 5 months last week. Infotech now makes up 16.1% of overall US net exposure, which compares to a 1 year low of 14.3% a month ago and ranks 7th percentile versus both past year and past 5 years. And in uranium and nuclear names, Taiwan Premier is very open to using nuclear technology to meet surging electricity demand in a signal that the government is reviewing its opposition to reactors. The uranium ETF URA was up 11.5% last week.
You are a what?
Oh, very well, very good, very good. Oh, mate, you can't let look. I'm just. I wish I was sick again. You make me sick. Few notes from Zach and News Squawk. The S&P 500 will approach 6,000 by the year end. Um, that's based on a median estimate from 411 Bloomberg questionnaire participants. I said a few weeks ago, it might even been a month or so ago, that my call was 6,000 by Thanksgiving. We might see 6,000 by Halloween. Who knows? Um, Bank of America estimates that Harris's proposal to raise corporation tax rate from us. Did you mention this, or were you only talking about the UK corp tax?
No, I was only talking about the UK. I haven't got to
Okay,
the
cool.
US yet.
Okay, yeah. So Bank of America estimates that Harris's proposal to raise corp tax to 28% from 21% would be a 5% hit to the earnings per share levels, while Trump's proposal to lower it to 15 would be a 4% boost. Over in China, China's commercial lenders cut their benchmark lending rate on Monday. Did you cover this? I can't remember if you did. I don't think you did. High anticipated move with 1 year and 5 year LPRs.
I
Both cut
was
to
I was
20.
about to mention that
Well,
already.
there you go. Cross that one off your list. Cut 25 basis points to 3.1% and 3.6% respectively. As I said, this was very well telegraphed. Um, China will account for less than half the global steel consumption in 2024 for the first time in 6 years, according to the World Steel Association. I did read an interesting fact. Well, I say interesting. I'm a bit of a fucking Z these days, but I found it quite interesting. It was something like currently I'm sure they said like more than half or something like that of kind of steel in the world is being at the moment being I can't remember what the stat was. I'm not gonna say the wrong stat, but basically a huge amount of the world's steel is now being pumped to Saudi Arabia for this NEOM project. This massive mega city,
Yes, yeah, yeah, yeah.
the big wedge. And I've seen some pictures of it. I thought it was all going to be complete bollocks, to be honest, and it was never going to get built. But they appear to be building something. I'm hoping it's a city, otherwise it's some kind of Death Star kind of thing going on down there. But yeah, it's quite impressive and yeah, one to watch, I guess. Where was I? France has been downgraded by Scope ratings. So Scope ratings are kind of like the ginger stepchild to Standard and Poor's
I was going to say, who the
and
fuck are
Moody's.
they?
They're like the European. They're Europe's version of Moody's, Standard and Poor's. Again, this is a ratings agency, so watching where the ball goes rather than where it's going to go. Um, or whatever it is, chasing the ball rather than watching where it goes. But yeah, it's just another bad headline for France. So obviously, I'm going to read it out. Let's be honest. It could be anything. It could be anything. It could be French cat stuck up tree. I'd be reading that one. Um, yeah, obviously, this is to do with the country's finances, and political impediments due to the ballooning budget deficit. We've also had hedge funds have slashed their bullish bets on WTI to lowest in 8 months on expectations of ebbed that Israel will strike Iran's oil infrastructure. Although we did hear some rumors that they still might strike Iran's oil refineries, but that's more in line with hurting their Iran domestically and also cutting off some revenue streams because obviously some people send Iran oil and then they convert it to oil products and export that to get around some sanctions and stuff like that. Carson Block. So I'm raising this thing because this ties in a lot with what me and you say often. So Carson Block, world-renowned investor, said investors would do just as well buying biggest US stocks over everything else. Just buy big, basically, whilst calling China uninvestable, something that else me and you have said many times. And something interesting he's noted, and it's nice that he said the quiet bit out loud, is that across his short selling career, obviously that's what he's known for. He would be better off if he'd have just been long S&P 500, and that is something that me and you have said multiple times. If in doubt, if you're looking to trade in markets or looking to be involved in markets, you rarely go wrong just buying an S&P 500 tracker and just letting it go because it's called the benchmark for a reason, and it's called that because it's very hard to beat.
Yes,
Moving on
exactly. It might be
quickly.
a bit
Go on.
boring, but it makes you
Boring's
money.
good, mate.
So who
I've learnt
cares?
that. I've learnt that. I'm doing the show with you. I've learnt boring is good. Whee!
Deary me.
US is investigating a leak of highly classified US intelligence about Israel's plan for retaliation against Iran. Obviously, that's been over the news all weekend. Um, Analysts believe that Israel could strike Iranian refineries to avoid oil production facilities. That's something I just mentioned just then. Israel announced that Iran tried to eliminate PM Netanyahu following a Hezbollah drone attack at his residence on Saturday morning. Chinese AI companies, so we just jumped from the Middle East back to China. Chinese AI companies are driving down costs, smaller data sets, and cheaper talent to create competitive models as they contend with US chip restrictions and smaller budgets than their Western counterparts. Now, the reason I've raised this is because I'm the kind of person that still says please and thank you to ChatGPT. So I am convinced that someday, at some point, this is going to kind of take over and rule us, and we're going to be its minions. I'm not too happy that China are doing this on a cost cutting basis. I'm a bit concerned that they're going to make some very angry Chinese AI, and I don't know how to say please and thank you in Chinese.
You best learn.
Well, yeah, exactly. If anyone can teach me, please, please. I do not want to be some Chinese AI's bitch for the rest of my life, however short that is. But yeah, that's my lot.
Cool. Good stuff. All
Thanks.
right. Well, in terms of today and the week ahead, today there is not a lot going on, to be completely honest with you. The only thing I had noted down was the LPR numbers out of China, which you have already covered. So it could well be a relatively subdued start to the week. And actually, looking at certainly the economic data docket for the remainder of the week, that is something of a theme. I think it's a little bit sort of calm before the storm vibes, particularly with things picking up next week, the budget, payrolls, and then of course, we're 2 weeks away now from the election in the United States and also the next Fed and BOE decisions. Speaking of those two, actually, we do have a ridiculous amount of
Oh
central bank
God.
speakers on
Oh,
the
and do you know what?
wires this week.
I saw it yesterday, and I was like, you know when like the Vietnam stare with the dog with like the Vietnam in the background. That I looked at it and I was like that, and I managed to like forget that I saw it, and you've just reminded me. Oh, I might go back to bed.
Honestly, I'm not
It's
going to
like
go.
every half an
It's
hour there's a speaker.
horrible. But for those who aren't aware, I posted a calendar out yesterday, so you can go and have a look at that. Or
All
Ryan
right,
can
I'll put
link
it
it
up.
in here
Yeah,
somehow.
yeah, yeah. I'm on it. I'm on it.
These central bank speakers, basically the IMF and World Bank, are holding their annual meetings in Washington DC this year. Which, if you ask them, it's a reason for them all to get together and the great and the good of the finance world to discuss the major issues of the day and all the rest of it. If you ask anyone else, it's basically a free holiday for all of the bigwigs and the journos who follow them around
Oh yeah,
to
and
go
the
and spend a
journos.
week in Washington, D.C., expensing drinks and dinners and actually not achieving much. So I wouldn't be paying too much attention to anything that this lot have to say, to be completely honest with you. It's also worth bearing in mind that it's a busy week in terms of corporate earnings. I think it is the second busiest week of earnings season this week. Probably the most notable comes on Wednesday after the market closed when we hear from Tesla. We also hear from IBM on Wednesday as well. But again, quite a few going out on throughout the week, which I really don't have time to work all the way through. In terms of macro events today and tomorrow, pretty dead. Wednesday, we've got a policy decision due from the Bank of Canada. The market pricing in a 50 basis point cut to 3.75% from the BOC, with a total of 85 basis points of easing discounted by the end of the year. The BOC have just 2 meetings left this year, so the market's seeing a decent chance of a 50 basis point cut at both of those decisions. Also on Wednesday, we have supply from the United States in the form of a 20-year auction, and the Fed releasing their beige book of anecdotal economic evidence as well. Thursday, a few things to bear in mind. We have the latest flash PMI figures from pretty much everywhere that you can imagine. The data for the Eurozone is expected once again to paint a pretty dour picture of the economic outlook. Here in the UK, we should see a modest pace of expansion across all three of the manufacturing, services, and composite gauges, while in the United States, the S&P flash PMIs, these are, will likely show the manufacturing sector contracting, the services sector expanding at a solid clip. But I would say that the ISM data is probably, it is a lot more reliable when we look at the United States, so
Yes.
do bear that in mind. Also Thursday, we get the latest jobless claims figures, continuing claims. That print pertains to the October non-farm payroll survey week. That data expected at 1.876 million for a prior 1.867. And then Friday, we've got Ryan's favourite economic release, which is the Tokyo CPI figures from
Woo.
Japan. We've also got the monthly IFO sentiment survey from Germany, which is likely to be utterly dismal because it's German economic data, and a couple of US releases as well, including the September durable goods orders figure, and the final consumer sentiment print from the University of Michigan. So a little bit of a quieter data docket lies ahead this week. I think, though, kind of calm before the storm feeling about it, given how busy the next couple of weeks are, and also given how busy the next couple of weeks are likely to be. I would not be at all surprised if we started to see a little bit of hedging and a little bit of de-risking into the election, certainly on the 5th of November. As I said earlier on, the S&P is up for 6 weeks in a row. We're up by just shy of 25% year to date. If you've been long for the year or the majority of the year, it would be foolish not to take some of that profit off the table
I've got
before
a
election night.
I've got a sneaky suspicion, right, that it's been a very good year for a number of kind of long only funds and all stuff like this. Well, for a number of funds in general. I've got a sneaky suspicion that when we see this de-risking for the
Mm-hmm.
election, because the election results aren't going to be known for solidified for a good few weeks
Do
afterwards
you
by the
reckon they're
sounds of
going to
it.
just shut the year at that
I
point?
think they're going to shut the year. I think there's going to be a lot of desks that call it a day. And when I say desks, to anyone that doesn't realize what I'm saying, I'm talking about like real money desks, big bank desks, all
I
this
wouldn't
stuff.
be surprised.
I've got a sneaky suspicion, and I've been chatting to a few of my learned friends that are still on these types of desks, and that's the vibe that we've had a good year. Why the hell, stick the intern on it for a month, and then everyone take no risk, just stay hedged, and that's it. And
I
you know
mean,
what? Would you blame them?
well, no, and also actually, if you think logically about it, most of the time we say that Thanksgiving is pretty much the end of the year anyway.
Yeah.
And Thanksgiving is actually quite late this year. It's not until the 28th of November. But if you just
That's
think
funny enough. That happens to be just quickly. That happens to be exactly 7 days after my birthday. Hint, hint.
oh right, great, good for you.
Okay.
The but also, if you think about it, working back from Thanksgiving, you've got the election on the 5th, you've got a Fed meeting on the 7th. The following week, you've got a CPI number, and of course, you hope that the election result is one known and two settled by then.
Yeah.
Why? Yeah, why would you bother?
Well, this is it.
When you start to think about it, you just kind of go, the only risk over all of that is a downside one, ultimately.
Well, and this is it, right? You can stay, and we're not saying get completely flat, but you can hedge, right? We're just saying there could be like a lack of new money coming in one way or the other. Um, I've not seen anyone mention it either yet, so have that one on me.
There we go, ahead of the game.
Exactly. Um, cool. Have we got any more?
Well, no, we've done a calendar for the next fucking 3.5 months
Yeah,
now,
that's
so
true. That's
I
true.
think
We're gonna
that'll
have to
do
do a
us,
show
mate, to be
tomorrow.
fair.
Right, perfect. Well, look, it's good to be back. Hopefully my my health continues to improve. I am feeling much better today. I just sound really awful. Michael, as always, thank you very much. Listeners, have a great week. If you're trading, as always, keep it tight. And we will see you all tomorrow. And now for the awkward silence at the end. See you later, mate.